we had oil looking like it wanted to break out yesterday, and we got a little reversal. What do you think here?
Yeah, the reverse. I mean, $1.20. I mean, we're still at almost $106 per barrel. It looks like a little bit of profit taking ahead of the June contract expiry. So I wouldn't make a big deal out of dollar pullback after we've run up to 105, $106 a barrel here. At the same time, there's little news on the UAE backing out of OPEC, which some speculate longer term could add to supply if they're not part of OPEC and part of the production cuts and the constraint out of OPEC. But that's sort of a longer term view. But it was sort of positive from, a price perspective that the UAE is backing out of OPEC. But we've still got this tension, still no deal, still no regime change, still a regime that is going to fight and claw before giving up their nuclear ambition of enriching uranium and having a nuclear weapon. And so we've said all along, not to be a broken record, but unless you have regime change, this is a religious war, fanatical objective for this regime. And it's going to be very difficult to reach a deal with the current regime, with their ambition, with their nuclear ambition. It's just going to be extremely difficult. So I think that the administration is doing the right thing and trying to put the economic chokehold on Iran. And I think that is beginning to work. We'll see how that continues to play out. But I think that's the correct strategy for now, and see sort of what chaos that drives internally and whether that does ultimately drive some regime change, although it seems not the likely outcome right now, but we'll see how that plays out. But that's going to be the strategy for now, which is going to keep things constrained out of the Strait of Hormuz, and why oil's run up another $10 a barrel here in the past several days, just on the fact that I think the market's beginning to realize the longer this goes on, the tighter this makes the whole supply situation. And at this point, Iran's running out of places to store their oil or to put it, which
Thank
means
you.
they begin to shut in wells. And you shut in wells there for a significant amount of time, and it begins to damage them and makes them harder to bring back on at the same rate they were producing at before. So again, this is not a good situation, and we've said all along, it's you sort of open the can of worms here that's going to be hard to contain. Granted, the Trump administration wants very badly to see energy prices come down ahead of the midterms, which is what, 5 months away. But I don't think that anywhere close to a deal. And if this economic stranglehold doesn't work, it may come back to the military option of stepping back up military action or attacks. And so that's not obviously positive for or good for bringing down oil prices. So this situation is going to be murky here, and we continue to hold on to the names we've said all along. We were holding on to all of our oil names. We were writing covered calls. We were just waiting to see how this plays out. And you've seen names like C&Q and others continue to move up. And, that sort of leads into earnings here. We haven't gotten the earnings from the oil names yet. We've gotten a few of the gas names. And what's interesting is our top two gas names, EQT last week and Expand Energy this week, have pretty handily beat on the top line number on the revenue because of better realizations on their natural gas price and not shutting in any production due to the storms this winter. And so the point there is that the market underestimates the capture of these higher commodity prices. And as we start then to see the oil names, at Conoco today, we'll get Chevron, Exxon tomorrow. I think you'll see on the oil side that the market probably doesn't fully incorporate the higher oil price we saw for the last month of Q1, although companies tend to sell on the beginning of month basis. But as we move forward, I think the market's still underestimating the realization these companies are getting at this higher oil price and how much of that's flowing to the bottom line that's not yet in analysts' full year estimates. And so, we will continue to hold on to these names. And in particular, we talked about EQT and Expand Energy, given where natural gas prices we think are near a low probably for the year, that we would continue to hold those names and any pullback accumulate, although they've not had a pullback. So we're holding on to those gas names. And, honestly, with the volatility and uncertainty on oil prices, the gas names have become a little bit more intriguing here, given where they pulled back to, and they've not had the run up that the oil names have had because natural gas prices have been pung. But we're seeing, like I said, very good results here on EQT and Expand Energy so far, and our two favorite names. We continue to hold those, and If there were to be any sharp pullback, would add to those names on the gas side. But long term, the fundamentals for natural gas remain in place, and that's what we talked about Monday is going to drive the long-term fundamentals for natural gas. Even though we're well below $3 today, the long-term fundamentals between LNG exports, AI data center demand, and just onshoring industrial production will be positive for the natural gas price fundamentals.
Yeah, it's funny you said that about about the closing the wells and having to store stuff. It made me think of COVID.
Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.